Hello everyone, welcome to the market snapshots for today. So for sure, very good market, be it the Indian market or the US market. It is time to remain optimistic about the market with slight bit of pessimism. And why do I say that? See, overall the market structure is looking good. There is little bit of volatility for sure in both the markets and across globe, I would say. Not little bit, I think the volatility is little higher. But I think more than the volatility, why I cannot be 100% optimistic about the market is the because of the rising dollar and rising yields. Somehow, we need to understand that a retail participant is not the one who is moving the rise of the yields. For sure, a lot of very big institutions are involved. US 10-year yields are trending across time frames. Whether you are a day trader, you are a swing trader, positional trader, investor, they are trading trending at all the time frames. So that clearly means there are big institutions buying there. Now the pessimism is if there are big institutions buying US 10-year yields, that clearly means a lot of confidence is not there in the equities, and that is the reason we keep seeing a lot of volatility in the equities market. So that is a major reason I will not be 100% optimistic about the market, although the markets are good. Like I have been saying, if you are a new entrant, look for an exposure maybe in the range of 50 to 75%. If you have been an early entrant and you are holding on to your positions with 100% exposure, keep doing it. But if you are a new entrant, be little cautious. Let's look at the numbers. Nifty 50 at 24,583, Nifty 500 23,743, Nasdaq 100 29,621, and S&P 500 at 7753. Not much movement across the market, pretty much stable markets. The chart of all these indexes and all these sub indexes are looking very good. This is Nifty 500. The advances were 229 to declines of 271. Again, the momentum is not coming. Somehow it is not deteriorating, but the fact is it is not gaining as well. Uh, New highs 15 against new lows of 485. The breadth is at above 20 EMA 287 stocks, above 50 EMA 306 stocks, and above 200 EMA 296 stocks. Very consistent breadth. I think this breadth has been as is throughout the month of July, and this is August. So why this breadth? I mean, if it is not moving, why am I optimistic about it? The reason being, see, there was a trend which came in, and now for sure it is not moving, but the good part is it is not going down. So basically, while globally, a lot of markets have been going down, have been crashing down, somehow India has been able to sustain to whatever rise it has made. So that is the reason I am optimistic about the market. Let's look at the chart. This is Nifty 50, very strong looking chart. If you look, this is a clear flag here. This was a huge momentum followed by a pullback which is strong enough that it is not even giving up. A breakout at around these levels means you can expect a very fast movements in the broader index. That is what I have been saying. While this rise started, a lot of momentum was with these smaller caps or micro caps, but somehow a lot of that has transitioned into Nifty 50, Nifty 200, or Nifty 500 sort of indexes of very strong looking chart. No differences here. Trading at its all-time high, a very similar strong, very similar structure. Making a flag, a breakout would mean a very rapid rise in Nifty 500 as well. So overall, the market sentiments of the Indian market, Nifty 50 bullish, participation is mixed, breadth is strong. Nifty 500 bullish, participation is mixed, and breadth is mixed. Like I said, if you are holding on to position, continue doing so. If you are a new entrant, look for an exposure of maybe in the range of 50 to 75%. Overall, the market is very good. All the pressure is externally, so that and we'll have to bring into that equation. Just by ignoring it doesn't help. Indian markets, Indian economy is not something which has everything on its own. A lot of external pressure do comes in the market, and that keeps affecting the market, and that is the reason I am telling the exposure should be in the range of 50 to 75%. This is S&P 500 advances 232, declines of 270, new highs 19 against new lows of 481. Very very strong breath again, above 20 EMA 317 stocks, above 50 EMA 330 stocks, above 200 EMA 353 stocks. Like I have been saying, I think it's been almost 2 months since I have been saying this is the strongest looking index all across. Not just because the chart looks very good, but also because the data has literally never gone against S&P 500. Even when Nasdaq started deteriorating, or maybe Russell started losing its momentum, somehow most of the liquidity from the mega caps or the semis or from the smaller caps moved into this direction, into defensive sectors in the S&P 500, and that is the reason one of the most promising charts at this point of time. This is Nasdaq 100, very very strong looking chart. If you look at the structure, it is the same what Nifty is forming a flag. The only problem in this chart here is I feel it might find a resistance here again, and that is the reason I am not very bullish, although numbers have been coming up good even for Nasdaq 100. But for time being, I think I'll still put my bet on S&P 500. On the contrary, this was all-time high which was taken off, and now it is trying to form a flag above the all-time high. Again, strongest looking chart hands down. For the US market, I am literally not looking anything beyond S&P 500. Very very promising chart, very very good numbers to support, and for sure clear winner for me. Russell 2000, again, if you look at it, same structure, they're forming a flag near all-time high, no resistance above. But volatility is slightly higher on Russell 2000, and that is the reason I would still, count on S&P 500 more than the small caps. So overall, how the structure of the market looks like, or the sentiments: Nasdaq 100 is bullish, participation is mixed, breadth is strong. S&P 500 bullish, mixed, and strong. Russell 2000 bullish, mixed, and mixed. So like I said, for me, from the US market, it will be S&P 500. Again, if you are holding on to positions, keep holding it. If you are a new entrant, look for an exposure of around 50 to 75%. The reasons are same. The markets are volatile. The rising yields or the dollar will not help a lot to the equities market, and this is where the problem begins. This is US 10-year yields are trading at 4.70. My major concern with the equities market, the reason I am not able to have 100% conviction about that rise, is because of this. Because rising yields are going to I cannot tell you a date, but then for sure either this needs to go down or the equities will come down. And trust me, if you ask me, this is not looking bad. This is looking very very strong. So that is the reason prediction or anticipation might not be very helpful. Just it's better we just wait and watch, play a little conservative. No, nothing wrong in doing that. If you save your capital anyways, the markets are going to stay. Dollar at 99.74, it has subdued a bit, and for sure maybe that is the reason your equities have been rising. VIX doesn't indicate much, I would say. Bitcoin, I think it is basing at around those levels of 60,000 to 65,000, which is again, at least at this point of time, gives some positive sentiments about the markets. Gold has, it has broken out. It is doing very very well at whatever time frames you want to trade or invest. This is dollar chart. This is what I am saying. Maybe this is the chart which is helping the rise of the equities very very. I think for sure this has helped the rise of the equities market, be it in India or the US markets. uh, Bitcoin, I think it is basing for sure. At around these levels. I don't know if it is basing to break out or break down, that I cannot tell, but then for sure it is basing, and it is a wait and watch for me. No, very very strong looking gold. Like I said, whether you're a day trader, intraday, or maybe a swing trader, positional trader, at every time frame you have an opportunity at gold. Don't miss out on it. Just keep looking at whatever time frame you are convenient, comfortable with. Just look for opportunities in gold. So yeah, that's everything. I mean, like I said, I mean, the markets are really good for sure. Be it the US market, Indian market, and now gold and silver both are doing pretty well. If you're a new entrant, I'll just repeat, have an exposure of around 50 to 75% in the Indian market or the US market. If you are someone who was an early entrant, has got positions, don't liquidate, just uh, stick with them with your stop losses. And if you're looking for opportunities in gold, there are ample of opportunities across time frames in gold, and utilize those opportunities. That's everything from my side. I hope you all found this useful. Thank you so much and see you next time. Have a good one.